What's up guys, Kevin Cage here with another crypto update. I'm feeling good today and I like what I see on the price chart, so let's run through a couple things, then we're going to dive into some recent news for XRP, Casper, and HBAR. So first up, I posted both of these on Twitter today with a bunch of price charts if you want to analyze these and cross-reference with what you're looking at, but I think this is super interesting. Right now, these are the two things I need to see before I call for an all-time high price for this year. One is for the Bitcoin monthly RSI to break through this level of 66.21. In 2019, we rejected this level, so this very much is the danger zone, but keep in mind, when we break through this level, we've historically gone to an all-time high price. And for reference, last cycle, when Bitcoin finally pushed into a new all-time high price, a few weeks or a month later, other assets, including high-cap assets, like XLM, did another 6 or 7x return. So I'm excited for that. I believe in all-time highs. I just hope it's this year because I don't want to wait until next year. So I need to see this, and then the second part I need to see is a full weekly close above the 50% Fibonacci retracement. During the previous 3 cycles, each time we got a full candle and wick completely above without touching the 50%, we've always gone to an all-time high price, 2016, 2020, and 2013. And after getting this close, how long did it take to break into new highs? 28 days, 98 days, 35 to 49 days for 2020, because I'm considering that wick right there as well at 35 days. So on average, when we see a full close above this level, we have seen Bitcoin create a new all-time high price within 1 to 3.2 months, so 1 to 3 months after that point. So this is something I'm looking at using the Bitcoin US dollar index for each of these price charts. You can compare with Bitstamp, but all of these charts are going to be slightly different, so I use the same chart for each cycle. And it's important to note that each Bitcoin halving date, 2012, 16, 2020, and 2024 have all been election years, which have typically been bullish for the crypto asset class. We've also had similar ranging periods in consolidation for 200 to 300 days, just like we had last year in this 200 plus day range. So we're seeing lots of similarities today. So hopefully I've explained that well enough. We see those two things, the 0.5 retracement full close without a wick even touching the 50%, as well as crossing the monthly RSI at 66.21. Then I will be calling for an all-time high for Bitcoin within 1 to 3 months after that point. And this is solely based off of cyclical analysis. If you think that is complete garbage, that's completely fine. I also know that we're in an interesting point where interest rates could be dropped later this year, which could also help assets or risk-on assets perform well. So if both of these things play out, the good case is we see an all-time high price for Bitcoin this year and alts to run a lot more. For the bad case, we never get a full close above the 50% Fibonacci retracement and the monthly RSI momentum never gets to run, breaking past 66.21. Which means we likely fall back down into reaccumulation and range even longer before the chance for an all-time high. So we know what it feels like to be an investor in the crypto asset class during bull runs and bear markets. During bull runs, breaking into new cycle highs, 2017, even 2020 and 2021, we are geniuses. In every multi-year bear market, we look like complete idiots, and I'm fine with looking like an idiot for a long time, provided the crypto asset class does head to new all-time highs. Let me refresh this page just to show you an example of why I'm kind of bad at replying to comments on Twitter. So as I scroll down and hit show comments right here, the majority of this is spam, so I don't know who's real and who's actually asking questions. Money-making bots, trading methods, referring to different traders, and these look like bot accounts. So the majority of the time when I do a post, I'll come back to it really quick and just scan if there's any questions, and all of these are bots. So overall, I see the argument of a crash going back into reaccumulation, but I also see the argument heading into all-time highs, and that's why I have those two criteria for the decision. We are very much at that point today or this month. I mean, we can see right here, coming back up almost to the 618 where we retraced to last time. Okay, super quick for Casper today before we dive into XRP. If you have time, I highly recommend watching the recent Twitter Spaces with the CTO of Casper Labs with Genfinity. This was recorded yesterday. She talks specifically about Casper 2.0, which is Condor, and this being a huge upgrade for the network. As soon as Casper Labs puts out more blogs and the estimators and calculators out, I'll be able to make an actual model for Casper. I see comments on Twitter and X, and a lot of retail investors completely misunderstand what Condor is. This is a huge change compared to what Cardano and Ethereum have done. This is gasless, and people are misunderstanding thinking that Casper is not needed. CSPR is the utility token of the network. It is needed. So this model could completely change things. Retail seems to misunderstand this, but enterprises already understand this type of model. So Meta said that Casper will be releasing more blog posts, estimators, and calculations showing real numbers, and then we'll be able to dive into this into detail. So it's changing the game in terms of gas models, and to still send transactions, Casper the token is required and it has to be locked up for a certain period. So I'm nervous and excited because I've never really seen this type of use case specifically for enterprise applications. She explains this in detail, so I recommend watching or just listening to that Genfinity one or another one by Jack on Twitter. But she explains how transaction fees don't necessarily contribute to the security of consensus. And this model could be much better to encourage better decentralization. So with Condor, I believe it's called an addressable entity, which is either a contract or account. So the unification of a contract or account on Casper, where contracts are able to pay for themselves. So how I understand it today is these contracts hold Casper to fund their applications. So it's spent in their purse and then it's slowly released back to them over a certain period. And for an attacker to affect Casper network and lock the blocks, it would require a huge amount of Casper tokens. She also talked about seeing a regulatory boom in the crypto asset class, comparing it to the internet and explaining how the internet actually exploded after getting regulations in place, and other innovations such as a browser. And it's the same thing we're seeing with artificial intelligence today. So AI has been around for years, but with the recent innovations in generative AI, ChatGPT, and these other models, it is getting another big boom. So we're likely going to see the convergence of all of these technologies come together in new ways, AI, blockchain, and more. Just like we saw the convergence of mobile and internet and 5G, and we have GPS. And Darren asked her a question about Nucleus Finance, and I believe she said, but don't quote me, I thought she said there have been over 13,000 test transactions on the testnet, but under this contract, this is the one that's named, I only see about 189, but they are recent mints. So the tokenization of Actis with Nucleus Finance, where Casper and Nucleus Finance are both on their website, is one of the biggest 3 data standards in the world that account for 98% of all financial contracts of $50 trillion market. So she said the tests right now with Nucleus Finance and Actis with Casper Network are focused on bonds because they're being seen as the lowest risk and easiest thing to tokenize initially, to tokenize those actual cash flows. So what's interesting is it only requires a total of 32 smart contracts. So these 32 smart contracts can account for every single type of financial contract in the world, a leasing agreement, mortgage, bonds, and terms for repayment, and all types of things. There was more she mentioned, but I'll have to refer back to it, something along the lines of a meta integration, discussing a grant recipient for tokenization of real estate and other businesses building on Casper, all types of stuff. And it looks like they're kicking things into gear, so we can see CEP82 token standard for royalties for Casper, the next interesting feature right here by Peter over at the Casper Association, I believe, enabling burning native CSPR on a smart contract level on demand. And now we have multi-sig or multi-signature on Casper Live, so supporting management of associated keys with multi-sig. This is the type of use case that enterprises actually need. It needs to be dynamic and upgradable and secure. So the next big waves of Web 4 are going to be hybrid and building the tooling of Web 2.5 to connect to the existing tech stacks of today that enterprises use for their databases and ERPs. The way to get enterprise adoption for these networks, Casper, HBAR, XDC, and dozens of other assets, is to build the tooling so it can connect into existing tech stacks and it's easy for the enterprise to actually integrate. But I get it, all of this information is just BS until we actually see price action realized for some of these assets, but this infrastructure is super important. Alright, next up for XRP and the XRP ledger, we have XLS30 officially live on mainnet, and this enables clawback functionality on the XRPL. This feature gives issuers the ability to recover issued tokens after they are distributed to accounts. Keep in mind that clawback is an opt-in feature for developers and can only apply to new issued assets. So this is for new issued assets. This feature cannot be applied to XRP, so all good. We also have the Q4 XRP markets report. So we know regarding the Bitcoin spot ETF and ETP, we had the approval for 11 applications that were granted for this year, and volumes crossed over 4.5 billion, with firms including BlackRock and Fidelity dominating the trading volume. Two of the biggest firms in the space, BlackRock and Fidelity, having trading volume for Bitcoin. That's huge. Especially because 5 to 6 years ago we were talking about this very thing and it's happening. However, a lot of Binance issues. Binance lost 15% of the market with that recent news. Spot XRP volumes rebounded in Q4, daily trading reaching $600 million a day. That's a lot of trading volume to have, but imagine the future when regulations are fully in place and can be used for utility at scale for cross-border payments even in the US. Ripple already holds a New York BIT license and has secured money transmitter licenses in nearly 40 jurisdictions in the US, and you can see that on their website. UK government announced that it will launch a digital security sandbox including debt, equity, and money market instruments within the sandbox's scope. UK's finance minister will probe banking challenges faced by licensed crypto firms in the country to encourage innovation in the region. We also had the country Spain announce it will aim to implement the European Union's markets and crypto assets, so the MiCA or MiCA legislation 6 months early, ahead of the July 2026 deadline. So this is what we're waiting for mainstream adoption, the huge regulatory catalyst to open the floodgates. Now keep in mind, it might not be that long because we still have cycles per the previous cycles, and volumes typically rotate into the crypto asset class every few years, specifically as we get close to the Bitcoin halving and election years, as we've explained. But my whole thesis of taking the crypto asset class to trillions of dollars with actual utility, not just speculation and rotating volume, is based off of a regulatory catalyst making Web3 mainstream. We have Hong Kong preparing regulations for tokenized real-world assets. The Monetary Authority of Singapore, the central bank basically, announced its plans for pilots with Japan, Switzerland, and the UK for its asset tokenization project. So what are these volumes for a variety of assets in the top 10, top 20, and top 50 that survive over the coming years going to be in the future? And also with anticipation of XLS30, a non-custodial automated market maker. We have Uphold launching its self-custody wallet Vault that will initially support XRP. I don't really use Uphold, and I'm sorry to bash them, but their interface is just so weird to use. There's people that have Casper on it, and they don't know how to withdraw their Casper. You can. You just go to the actual support tab, and you can find out how to withdraw assets. They just make it very, very confusing. I prefer the interface. I mean, I don't really like Coinbase that much, but the interface is easier to use than Uphold. You know, Binance or Binance US, Mexi, these other exchanges are just a lot more intuitive. DappRadar announced the integration of the XRP ledger, enabling access to data and insights on apps within the XRPL ecosystem. For performance tracking and metrics, important, we have Band Protocol announced its integration with the XRPL, making it the primary Oracle provider of the XRP ledger's mainnet and its EVM sidechain. So we have developments occurring across the board. I still want to see the AMM, PureSys, EVM sidechain, all things that we need to see for a healthy and strong ecosystem. This group, Adito or Atato Digital Asset Custody, plans to integrate with Chronos Chain in the XRP ledger, streamlining the coding processes to protect and support tokens across both EVM and non-EVM chains. So we've seen on-chain activity increase by 34%. Keep in mind, they're going to show stats that look good, so obviously be cynical when you're looking at this. There were a number of unauthorized transactions moving XRP out of several wallets belonging to Chris Larsen. Exchanges were notified about those wallets or flagging those addresses and freezing funds. We'll see what happens with that. That's scary. And even considering Discord hacks, even people with Discord and two-factor authentication, they are getting hacked because this hack is very, very complex. So be safe. If you ever see any Twitter accounts out there just posting a link that looks sketchy, don't click it. Verify first. You could maybe try to take the link and post it in a URL scanner, but even that's risky because you don't want to open that link. Okay, and a few big things going on with Hedera. We have a bunch more to cover for XRP and HBAR in future videos as I'm getting back to YouTube. And all of the information I share in these videos is important and relevant to understand. If you only hold XRP, you have to be paying attention to other ecosystems or you're going to have tunnel vision. So Hedera is part of a 5-year agreement valued at $250 million, $250 million, with the Saudi Ministry of Investment, the MISA. The Hashgraph Association has announced the launch of the Deep Tech Venture Studio, empowering companies to develop innovative technological solutions, aiming to foster innovative investment opportunities in KSA through partnering locally and globally to support the entrepreneurship ecosystem. The whole MENA region is huge, and they're a lot more progressive of blockchain adoption compared to the US. So this alone is huge for the adoption of Web3, specifically with Hedera or the Hashgraph Association being involved. Specifically designed to empower local Saudi companies as well as international companies interested in operating in the kingdom. Technology like AI, blockchain, robotics, IoT, virtual reality, and quantum computing, all converging. So Zepsi sharing $250 million over the next 5 years. Deep Tech Venture Studio. $200 million was put forward by private Saudi investors to fund 500 plus deep tech Saudi companies. This alone, looking at Hedera's mainnet, its mainnet has over 40 billion transactions so far, with high TPS. A lot of people complain about Hedera because it has 50 billion tokens, but that is the max rate. And if we have billions more of transactions in the future, they might actually need it. And assuming that all 50 billion is in circulation in the years ahead, a $50 million market cap would be $1. It is far less now, so it takes less to reach $1 for HBAR, but just keep that in mind because these large enterprise platforms like Hedera could very well see very high market caps. And even right here by Gen Infinity, Galaxy, built on Hedera, introduces crypto to cell phone Web3 onboarding service. This is exactly what I'm talking about with the convergence, or technology bringing it to Web3. Mobile users globally can now engage with crypto directly via a text message. It seems like a simple use case, but this is important. And this is the future for a lot of these networks, and just imagine the new applications or use cases that we haven't even thought of yet. And last but not least, guys, we have iTrustCapital linked in the top of the YouTube video description for crypto Roth IRAs. I've had a Roth IRA with iTrustCapital since January of 2020. So all of my gains in a Roth IRA are 100% tax-free, paying 0% in capital gains. It's completely free to open an account and have one. There's no monthly fees. There is just a 1% transaction fee if you trade, and they do have their mobile apps available on Apple and Android. Feel free to check them out. If you do decide to fund an account, you get a $100 funding reward in USD. Thanks for watching, guys, and I'll catch you in the next one. If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.